3, 2, 1. Get the red bar going across the bottom here, Maddie. I never know exactly when it clicks live, so it's possible we are
live. It's live.
Okay, and I believe we are live here on our YouTube. Actually, I just got a notification of that. Welcome out here tonight. It is 7/1, first day of July here in 2020. What a year it has been. And one of the additions that I've been very, very happy with has been our Wednesday night special webinars here on Tackle Trading's YouTube channel. It's Coach Tim here. I'm hosting tonight. I've got my brother, the CEO of Tackle Trading, who I'll introduce here in just a minute. He's going to be presenting Technical Analysis 101. Tonight's topic, the art of identifying support and resistance. Several things come to mind, in my opinion, when I think about charting and learning how to trade. One of them is learning the basics of price action. And there might not be two more important concepts just from a basic perspective than price action first, and then just levels, learning how to find a pivot point, identify a trend, find support, find resistance, those kind of characteristics. And I know what Matt's got in store for you. I'm very excited to have him give you guys some education, do some training here tonight, and have you guys learn some things here at tackletrading.com. When we think about what we do here from a community perspective, there are really four basic premises, four areas that we try to focus on, from that perspective. And we're going to be covering some of those here tonight. Tackle Trading is an education community, and we've got a lot that goes into it. We put a lot of work in on the back end, designing systems, designing courses, bringing content to you guys through blogs, through these videos here on YouTube. And so we appreciate your support. Quite frankly, very, very directly, very simply, we do appreciate your support, and we love our community out there. If you are a veteran of our community and you're popping into our channel right now, welcome. Let's have some fun tonight. Let's learn a lot. Hashtag Team Tackle is the hashtag that we always use out there to kind of talk about our community and our tribe that we're in here as a team here as traders out wherever you are across this country, across this world. Pop that in the chat. Let us know how you're doing. If you're new to our channel and it's the first time you're watching this, make sure you click on the subscribe button and click the bell. Come back and join us on our daily shows and these weekly webinars. And Matt, there are four pillars. There's four basic principles that, we need to discuss one at a time. First one is education. People tend to want to put application first, and it's just not the order of, items that you have to go through when you're learning how to trade. You have to truly learn this stuff. And it's not a one-day course. It's not a one-week event where you just kind of crash course in the markets and you learn all the terms. You can't just memorize a glossary and become a good trader. You have to commit to your daily routine. You have to commit to studying these concepts, these principles, position sizing, entry points, targeting, options, stocks, futures, Forex, all the different products. So a commitment to education is a very, very critical thing. Second thing is you do actually have to trade. You can't just learn forever. You can't just study. You can't just be that great student that gets A+ grades all the time to brag to your friends. At some point, you got to start applying it, whether it's in virtual trading, back testing, live trading, all of the above. Traders trade, and they do that on a daily, a weekly, a monthly basis as a regular part of their routine. And we're a big believer in that. And then connect, the community aspect of this, these webinars, the clubhouse, getting into some of the stuff we do from a Trader's Lounge perspective, or our nightly webinars like tonight. After this event, for our Tackle 25 system members, we have a mastermind group. So many different ways to connect within this community. And really, it comes down to you guys out there. If you ever need something, make sure you show up, put your butt in the seat and ask questions and be a part of it and participate, and then succeed, and at the end of the day, we have to focus on outcomes. You don't make money every day in the market or on every trade in the market, but the goal is to have a trading system that you understand, how to execute, that has a positive equity curve, where you're making money over time and building your wealth plan, whether that's for a retirement plan, an income plan, both. As a trader and investor, these are some of the pillars. These are the four pillars that we really focus on. And quite frankly, we're not here to listen to me. We're here to listen to my brother here. And he's dialed in. I know that. He's ready and excited to come and share his knowledge with you. Matt has been in the market for 15 years. Tackle Trading is a company and an organization that we started about 7 years ago, and we're very, very proud of the growth of what we've been able to accomplish, bringing people together, teaching people how to trade the markets properly. Matt is the CEO of Tackle Trading. He is our leader. He's the one who sets the vision, all of the things that we bring to you guys. I mean, a lot of that comes from the mind of Matt, quite frankly. And I know he's very passionate about financial education, about the message that we have. And I think you guys are going to be excited to hear from him. A couple things about Matt. Number one, he is a firm technician. If I can ever push one of his buttons is if I challenge him on a technical concept. There's no doubt about it. Part of that is the way his mind works. He's an analytical, he likes detail. He likes data, and traders really focus on data. Where is that exact pivot point? Where is that intraday level where you've got a trigger on? Do we have momentum changes in the chart? Things like this matter when you're reading charts and reading technical analysis. And I know Matt's going to bring some of that wisdom, some of that experience to you here tonight. Without further ado, I'm going to bring in my brother, Matt. How are you doing tonight, sir?
I comb my hair for this, Tim. I'm excited. That should tell you how excited I am. It's at Tackle Trading, I spend a lot of my time on the back end of Tackle, building systems, detailing rules, changing through rules, just you name it. In the halftime report, I get to come in here and I get to, analyze the markets on a daily basis. But when you're analyzing the markets or when you're building systems, I mean, that's a different skill set. When you're trading, it's a different skill set. And sometimes it's mundane, right? You're going through a tremendous amount of data, just a tremendous amount of data, modifying, back testing, you name it. But what I really love to do, I mean, just a passion I have is teaching people how to do that. And so I don't do as much of this as I once did, right? I leave that to Noah and Gino and Coach Emily and, yourself and Tyler and, Keith and, all of the other amazing, coaches that are far better than I am at Tackle Trading. So I leave it up to the experts there, Tim, but I am excited to be here tonight with the Tackle Trading crew, as well as I'm sure many people that will watch this video that are maybe not familiar with Tackle Trading or what we do as a company. And so I'm excited to introduce Tackle Trading and these concepts of technical analysis to everybody watching this on YouTube. YouTube is amazing. Technology is amazing. And what we're really going to focus on here tonight, ladies and gentlemen, is we're really going to focus on the concepts of support and resistance. But to truly understand the concepts of support and resistance is you really have to understand technical analysis in general. So I'm going to talk to you about just what is technical analysis. I'm going to get into trend analysis, bullish uptrends versus bearish downtrends, what creates those patterns, why those patterns repeat themselves, because there's a certain psychology in the market that, like human beings, we have a tendency to repeat. History has a tendency to repeat. Patterns have a tendency to repeat. And so we're going to get into the concept of what creates those bullish and bearish uptrends. And in that concept is a very important technique called identifying pivots. And that's what really support and resistance is. It is pivot identification. It is when we're looking to see that change in direction in a stock, in a commodity, in a currency, in whatever we're really analyzing. And that is the number one thing I love about technical analysis, is it is universal against every asset class. I was one time teaching in San Diego, and this medical professional comes up to me and she says to me, and she was widely successful, just intelligent, smart, successful, you name it. And she said, Matt, what you do on technical analysis on a stock chart is what I do on data plotting on healthcare. And I'm like, yeah, it's universal. It really is. Trends are trends, patterns are patterns, support is support, and so on and so forth. And so unlike other forms of analysis, like, behavioral analysis, fundamental analysis, economic analysis, technical analysis is the one thing that is universal to every asset class. And so when you're learning how to trade currency, a chart on a currency pair is the exact same thing as a chart on, if you're analyzing Apple, Google, Microsoft, Facebook, Zoom, or whatever stock you're looking at. I love that. And that's why it's the bedrock. It's the foundation of almost every trader I've ever known. Yes, I geek out on economic analysis. Anybody who watches the halftime report knows how much I geek out on economic and central bank analysis, monetary policy, fiscal policy, but it's technical analysis that really is the glue that brings everything together. And so what is technical analysis, and what is those three pillars that we as technicians believe in above all things. Number one, price is king, price is queen, price is everything. It doesn't matter what you think you know. It doesn't matter what book you read, what some Wall Street expert said on some random news organization. Price is absolutely everything. Like I said, I geek out on behavioral economic and fundamental analysis, but it's only to understand the price more. It's not to find a reason to not focus on price. It's to give myself more confidence in that price, whether that price is going up or whether that price is going down. Number two, price moves in cycles and trends. And you can look at it from a long-term perspective, looking at macro market cycles, such as the business cycle, where, we see these macro trends go up and macro trends go down on monthly or weekly charts. But you can also see cycles in intraday charts on a daily basis. So regardless of the time frame you're looking at, price moves in cycles and i.e. thus trends. And then at the end of the day, history is the best barometer of the future, and history has a tendency to repeat themselves. Now, very quickly from a trend analysis perspective, in a trend, you have three basic types of trends. The first one, and for those of you who are pro members of Tackle Trading and you're veteran traders out there, obviously this is going to be a little bit of a review. You know what a bullish uptrend is, but let's bring up everybody. Let's raise all the boats. Let's raise all the ships. Let's be the rising tide, and let's raise everybody up. A bullish uptrend is simply price appreciation over time. So looking left to right on the chart, you see higher highs, higher lows. In a bullish uptrend, we really want to focus on buying stock, buying call options, focusing on what we call delta trading. So whenever you see the word delta, that means we are directional in some capacity. Whether you're buying stock, buying a call option, or doing some type of advanced option strategy like a bull call spread, we're looking at taking advantage of that bullish uptrend. In a sideways neutrality, otherwise known as stagnation, you're really not looking to trade actively in this environment. It doesn't mean there's not going to be a trade that sets up, but what you're really looking for to trade directionally is you're looking for a breakout. You got to break at this higher level of resistance and thus start that bullish uptrend, or you're looking at violating the support level underneath. And I'll get into the concepts of support and resistance here in just a little bit. And then you're looking to make that trade. But while you're in some degree of stagnation, you're looking at cash flow strategies. When you're looking at stocks, you're talking naked puts, boomerang trades, covered calls, credit spreads. There's a lot of ways to create cash flow within the stock market. And for those of you who are new to the financial world, and even if you're new to the real estate world, cash flow systems work in the financial world very similar to what they work in the real estate world. You have your rentals, we have our covered calls, but we have so much more ammunition. We have so much more liquidity. We have so many different techniques that we can create in a cash flow environment in the financial world. And so when we see neutrality, some cash flow traders like my brother Mark is one of the better cash flow traders I know. He loves these types of trends where they're just doing absolutely nothing. That allows him to approach it from a cash flow perspective without having the emotion of losing out on some of the upward movements in price. And then the third type of directional trend we have is what we call a bearish downtrend. And in a bearish downtrend, price is depreciating over time, number one, but also number two, you're looking to short the stock to make money as markets go down, which is kind of a unique type of analysis if you've never made money on the downside. But markets go up and markets go down, and like you've heard me say at Tackle Trading many times, there's always a bearish trend somewhere. You just got to find it sometimes. Learning how to trade in a bearish condition is very, very important, and it's very similar to trading in bullish conditions. Instead of buying a call, you buy a put. Instead of buying a stock, you short the stock. Instead of a bull call spread, you have your bear put spread. And so you have not very similar, you have identical systems and strategies and rules trading bearish downtrends as you do bullish uptrends. And the last thing I'll say about the bearish downtrend before I get into a little bit more detail on this trend analysis is a lot of traders prefer downward movements in price because gravity is very, very fast to the downside. Markets simply go down a little bit faster than they go up. So let's break this down from a trend perspective on a bullish cycle. When you're talking about the creation and the psychology behind a bullish uptrend, you're looking at overbought, oversold conditions. But what the trend is as you start to come down into what is known as the higher low, markets get a little oversold. And we have muscle memory. We see the stock or the commodity or the currency. We see that at a higher high just 3, 4, 5 days ago, and we're like, oh, we're getting a discount. Well, as it's oversold, then we now feel like literally it feels, it's psychological to a certain extent that we're getting a discount. That's when traders come back in because of the oversold condition, and that drives the market up, up, up until you get into what we call overbought. And when we get overbought, that's when we're coming into resistance. And as we get overbought, what's the only way that a trader can actually make money? It's not when they just buy and hold and just let it go. No, you have to lock in profit. And so as an active trader, as the market gets a little bit overbought, you start to create distribution by locking in that profit. That drives the market back down into the oversold condition. And so psychologically, just because the higher highs, higher lows, we're looking at taking advantage of this trend, and this trend will simply continue until it doesn't. And when I was a young trader learning how to do all of this stuff, I would microanalyze that. Oh man, that's been going on for 4 months. It's got to be over. It's got to be over. Or, oh man, I wish I could have went back 8 months ago and bought this stock back then. But you can't play that game. Trends last until they don't. Period. In a sentence. You trade the trend until the trend ends. We all wish, and I'll talk about Apple here in a second. We all wish, looking at Apple here, we all wish we could have went back and said, okay, yeah, we see the oversold condition. It retraces down into the moving averages. We all wish we could have bought here and held throughout the entirety of the trend. Would have, could have, and should have. You got to learn how to analyze in real time, because this trend and this pattern will continue until it doesn't. And yes, 3 months ago, you could have went back and made a tremendous amount of money. And I'm willing to bet a lot of people that tackle trading made a lot of money in that condition, because we analyze these things every single day. But as of right now, if Apple breaks out, that trend continues. You're seeing a very similar scenario. So I'm not going to hesitate to buy Apple above resistance, because it's the continuation of this trend. And even though myself and everybody here in this webinar wishes we could go buy here, wishes we could go buy here, wishes we could have bought the breakout there, wishes we could have bought the snapback flag pattern here, would have, could have, and should have. You got to analyze this here. And if this breaks out, that is the continuation of the trend. And this evidence over the last 3 months gives me a lot of confidence in that breakout, because the trend is so consistent, especially in 2020, where a lot of this technical analysis is now done by computer algorithms and not necessarily you and me making these emotional or psychological decisions. Now, when we look at the pattern from a simple perspective, you're really looking at it simply as a higher high, higher low. So on a candlestick perspective, you're obviously going to see it a little bit different. It's like walking up a set of stairs. You walk up the set of stairs, you have a higher level of floor. You now have a higher level of resistance that you need to overcome on the next step. Breaking it down from a simple perspective, because I really do believe simple is better, especially in the complicated, areas of the financial markets. We're really looking at what is called a higher high. Now, when you create the higher high, that is known as resistance. Resistance is always above the asset class. It drives the asset class back down. So when we get overbought, it's because we're coming into some degree of resistance level, a known level where traders, institutions, algorithms, hedge funds, the active members of the financial world, because you certainly have passive members of the financial world and you have active members. The passive members, they park money, do nothing, wake up 30 years later, hopefully they have more money. The active members, they're locking in profit, they're trading the cycle. And so the higher high, that is an area of resistance where traders are looking to lock in profit. That distribution drives the market back down into what is known as the higher the higher low, which would be your area of support. The trend, the pattern, it repeats itself constantly until the pattern changes. Now, what we like to look at this is a simple pattern called the core 1, 2, 3 pattern. Now, what creates a bullish uptrend in the first place is typically you have some degree of neutrality or sideways condition, stagnation, some degree of just neutral consolidation. And remember what I said when we were talking about the three types of trends, bull, bear, and neutral. A bullish uptrend begins when resistance is violated. So when you're looking at resistance, that is what we call the bullish breakout. That starts the bullish uptrend. And when you see the first breakout of neutrality, whether it's a month, 2, 3, 4, or 6 months, it doesn't matter. But when you see the first breakout, that is an amazing time as an active trader, because you have so many different time frames of trades that you can look at. Whether you're looking at a swing trade where you're looking to lock in profit at the second stage of the 1, 2, 3 pattern, i.e. resistance, or whether you're looking just to trend trade this until the trend stops. And so in the 1, 2, 3, 1 is the breakout. So what I want everybody to do in chat here, 1 equals breakout. That's the first pattern within the bullish, within a bullish trend, is it has to break resistance. And thus pattern number 2 is what we call overextended. Once it gets overextended into a known resistance level, that's where we're looking to lock in profit. We are not looking to short here, not in any capacity. Even if I expect downward movements in price, we are not looking to short against a bullish uptrend. There are much better shorting opportunities in bearish downs or the violation of support. We're simply looking to lock in profit at point 2, thus driving the market back down into that support level. And that's where it's coming into a known level of support. And that's what we call the bullish retracement. So number 1 is the breakout, number 2 is the overextended, and number 3 is that bullish retracement. And we repeat this pattern until the pattern ends. And what that means, ladies and gentlemen, is one of the most important concepts to understand in technical analysis in identifying any of these potential patterns, any of these potential trends, any potential rule, anything really, is the concept of identification of where that support level is and where that resistance level is. Now, in bearish downtrends, it literally is, for those of you who are new to the market, it literally is just flip that chart upside down, and now you have a bearish downtrend where you get to the oversold condition, buyers come in, driving the market back up into resistance. Now you have a lower high, and you have that pattern repeat itself over and over and over again until it doesn't. Now, ladies and gentlemen, very quickly, do we ever want to question the length of the trend? If it's been going on 3 months, 6 months, 9 months, 10 years, 20 years, or if you're looking at the market cycle all the way back to 1913 with the creation of the central bank and what they do to manipulate all price action, it does not matter. It doesn't matter in any capacity. Markets go up, markets go down. Every time somebody says it's too high, I literally right now, I say, go look at Tesla. Go look at Tesla. People have been saying Tesla is too high since $30. I've been there because that's when I traded Tesla the first time. And they said it was too high at $30, and now it's over $1,100. And you know what? People are still saying it's too high at $1,100. And when it gets into $2,000, God willing, you let it happen, then you know what? People are going to say it's overextended and you should have bought it $30. Fine, fantastic. I'm not saying they're wrong. Maybe it is overvalued. Maybe it is overextended. Maybe. It doesn't matter. You trade the pattern until it ends. You stick with the trend, you stick with the program, and you don't let that little devil, whisper these words in your ears like, oh, but what if it comes down? Oh, but what about this? And what about that? And what about that? That's what we call variables. And variables play themselves out over time. And sometimes they help you and sometimes they don't. Looking at the pattern from a candlestick perspective, you simply are now walking down the stairs. Every time you violate support, you're taking another step down. Every time you take another step down, you now have a new high, you now have a resistance level that is now decreased. And so what you're looking at is a lower low, lower high, lower low, lower high. So as the market now takes that next step down and we're established that next lower high, coming into a very consistent trend line, i.e. old support, now new resistance, that to me is now an indication of price depreciation. We want to take advantage of that to the downside, to the downside. Looking at the pattern simplified, we're looking at a simple lower low, lower high, lower low, lower high, lower low, lower high. And once again, whether it's three waves, 6 waves, 10 waves, 12 waves, 3 months, 6 months, 12 months, does not matter. You trade the trend until it's over. And by the way, it can never get too high. There is no price threshold that it can get too high. That's not how the financial worlds work. They go up, they go down, they go up. And if they don't go down, then they split and they artificially drop their price. Berkshire, if Microsoft never would have split, guys, Microsoft share, and I'm just guessworking here, but Microsoft per share would probably be worth about $550,000 per share. Like Berkshire never split. It's about $200,000 a share. Markets go up and they can go up forever and ever and ever the exact same way. There's no ceiling on the central bank's balance sheet. So markets go up. It cannot get high. It can get overextended. It can get overvalued, but it cannot get too high. The same way it cannot get too low until it goes bankrupt. And then I start thinking Robinhood traders and volume coming in on Robinhood, and then maybe it doesn't even go lower than that. But 0 is the low price. So if a stock's going from 90 to 15 and you're like, oh man, I wish I could have went back in time and shorted it at 90. Yeah, would have and could have and should have. But it went from 90 to 15 for a reason in a bullish market, ladies and gentlemen, because that trend, that pattern, lower low, lower high, that was consistent within the entire time period. And I am not going to be the trader that says that trend is going to be over, because when it's over, we'll be able to see it based on the concepts of support and resistance now holding. So in terms of that core 1, 2, 3 pattern in a bearish trend, we're always looking for pattern number 1. Pattern number 1 is the breakdown, the violation of support. And one of my favorite techniques to apply, and for those of you that are familiar with the step system, you'll be very, very familiar with this, but is that bearish breakdown. Putting an order, putting a nice little self-stop order right underneath these support levels so that when the market does break down, we take advantage of that by getting aggressively into the trade. And then that drives the market down into pattern number 2, which is the overextended, oversold condition. And what do we have to do to lock in profit? This is so amazing when you actually think about it, because when you think about why markets go up, you think it's people actually investing in stock, or Main Street America thinks that. That's not necessarily true. Sometimes when the market is in a bearish downtrend, it's not actually people buying the stock. It is simply the traders who were short coming into pattern number 1. And what do they have to do? Well, when you short a stock, you don't buy it. You are borrowing that stock from somebody else in pattern number 1. So you're borrowing the stock with the expectation the stock's going to go down. To close that trade, what do you have to do? You have to buy it back. And so through that buying it back, so let's say I'm short 100 shares of XYZ company on pattern number 1. Well, when I get to the overextended pattern number 2, what do we have to do? We have to now buy 100 shares. I'm not owning 100 shares. I'm just simply closing out the trade. But simply because you have to buy something, you see markets go back up. So a lot of times in bearish conditions, market goes up just simply because the traders are now locking in profit on their short positions. In fact, there is a tremendous amount of evidence. Can we all agree that in the last quarter, despite the economy being absolutely disastrous, just trash, the worst trash economy we've ever had in our lifetimes, markets had a great quarter, an absolutely amazing, amazing quarter. Well, guys, one thing you have to understand, one of the reasons that created that amazing, amazing quarter is the traders who were short in March and April. What did they have to do when the market started going back up? They had to close out of all of their short positions. The banks came in and said, you know what? We're going to call back your shorts because the market's going up. So all of a sudden you have all of these shorts that are now going up, 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 up. One of the primary reasons that Tesla, and we talked about Tesla earlier today, ladies and gentlemen, one of the primary reasons that Tesla is going up, 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 right? It's not only because of the fanboys of Elon Musk. It's not only because Elon is a great CEO. It's not only because Elon simply lives his life. That is not the only reason. It's because at the beginning of March, guess what Tesla's short rate was? It was about 29 to 30%. 30% of the entire open shares on the market that you as an individual could invest in, they were being shorted. Well, right now, that is now 10%. So what happened to the 20% of the short float that is now evaporated? Well, Elon, he declared victory against those shorts. And so one of the reasons that Tesla has had such a metric rise over the last really kind of October till now is because the shorts are capitulating and it is driving that market back up. So coming back to this very important concept in pattern number 2, it is not simply just investors buying stock. It is certainly not the traders, buying call options to thinking the price is going to go up. It is the traders locking in profit, thus driving this pattern back up into pattern number 3, which is the bearish retracement. So at number 1, we're looking at the violation of support, that is otherwise known as the breakdown. Pattern number 2, we're looking at overextended, where the shorts are coming back buying back their stock, driving it back up into pattern number 3, which is the bearish retracement. Rinse and repeat. The shorts are now looking to short again, and they're going to trade that pattern until that pattern ends. Now let's take a look. Now that we have an understanding of trends, patterns, the psychology that creates the trends and the patterns, let's really take a look at those very important concepts of support and resistance. Now, support, ladies and gentlemen, is always defined by the actual marketplace. We prepare for where support is going to form. That is what we call a technical catalyst of support, but it is only defined by the actual marketplace. Now, when you understand support is when the market is coming down, 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 down. And the market is coming down because supply outweighs demand. Yes, the Fed still manipulates price. Wall Street manipulates price. There's no doubt about this, okay? But the reality is the reason it still works, even though the Fed manipulates it, is because they're doing something with their money, i.e. supply and demand. So even though there's a lot of more market participants in the market today than there was even say 10 years ago, you still have those ultimate concepts of a free market economic system that supply and demand is what creates the price. So what drives the price down is traders increasing the liquidity, increasing the distribution, increasing the supply. Bears are selling their position. Scared bulls are selling their position. It is driving the market down, 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 down. And then when support comes in, it's because, and I'll go through some very basic concepts of how you can identify support in real time. But when support comes in, it's when the buyers come back in at that support level, and now you start to see demand outpace supply. And so once demand comes back in, you'll see this through the visual identification of candlesticks, and I'll get into that in just one second. But it's because demand is now outpacing supply that drives the market back up, 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 up. And these concepts of support, it is simply because demand outweighs supply, driving the market back up and up and up and up and rinse and repeat. Now, when it comes to the identification of support, looking at this a little bit more clearly on a candlestick chart, let's say the stock is coming down, 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 down. Now, guys, for those of you who are very, very new to the market and you don't understand technical analysis and you want to learn this, Guys, candlestick analysis is a very important concept. Check out Technical Analysis 101. Check out the step system. I teach it, I believe, in modules 1 and modules 2 of the step system. We also talked about it in Technical Analysis 101 for the pro members there as well. But for those of you who are new, candlestick analysis can be a very, very lengthy subject matter. Entire books, novels, dictionaries, webinars, you name it. You name it, it's out there, right? It is a very in-depth subject matter that I'm going to make really easy so that you don't have to go buy any of those books. Despite the fact that there are hundreds and hundreds and hundreds of candles, candlestick patterns come in all different shapes and sizes, single candlestick patterns, double, triple, and the quad 4. So these are all different data points that can kind of create the candle. But one thing that I have realized in my career as more as an educator than as a trader, because the trader skill set is different than the educational skill set. But as a trader, I geek out on what a bullish engulfing candlestick is. As a trader, I geek out on, looking at hammer candles versus inverted hammers versus dojis versus morning stars, gravestones, dark cloud covers, piercing lines, you name it, the dark night, and I just literally made one up. And some of you don't even know which one I made up because it's just a name, but it doesn't matter what the name is. What it matters is the identification. And one thing I've realized in all of candlestick analysis, ladies and gentlemen, is you can certainly put a name to it and you need to learn the name of every candle. But for new traders, simply understanding the length of the candle can help you understand what the candle really is trying to indicate. And that is the concept of momentum. And although there are hundreds and hundreds and hundreds of different candles, there are only two types of momentum. And that is increasing momentum and that is decreasing momentum. Now, the concept of decreasing momentum is as important as the concept of increasing momentum. As the market is going down, 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 you are seeing the increasing in momentum to the downside. On day one, not every bear hits it. On day two, every bear hits it. And that momentum has a tendency to continue until it doesn't. Well, as the market is coming down, 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 coming into that support level, one thing you can start to look at is the length of the candle. When you start to see the candles get a little tighter, when you start to see smaller candles come in, that is the indication that this bearish momentum that is driving the stock back down into support, that bearish momentum is now ending. And as the bearish momentum is now ending, you are seeing a slowing momentum. It does not mean buyers are controlling. That's not what it means. It means you have a battle going on between buyers and sellers, bulls and bears, supply and demand, distribution, accumulation, however you personally want to categorize it. You have this eternal battle between the bulls and the bears. And this battle is being waged and it's almost equal. We don't want to pick a side. We want to see the winner start to win, and then we jump on the bandwagon, ladies and gentlemen. The slowing momentum of the candle is the indication that I'm getting ready. I don't want to jump into the pool too early. I don't even want to dip my toe. I want to see that big upward movement in strength to show me that support level that I was looking at, that support level that I was prepared for, that support level that I spent the last 4 days waiting for, that level is confirmed, that it does not get violated. I want to see that go upward movement in price. And with that said, I want to introduce every single one of you to a very special friend of mine. I want everybody to say, hello, Marty. Marty the Elephant, my best friend. Now, as an educator, I'm not going to spend too much time on this. I literally have taught a 4-hour technical analysis live class, literally with this elephant jumping on the trampoline for 4 straight hours. I'm not kidding. I had them nodding up and down with it. I had them literally just staring at this because I believe this. If you can understand why this elephant goes up and down on this trampoline, you can understand almost every important concept regarding technical analysis. Now, how I found this elephant very quickly is I was literally talking to my daughter one day about the concept of support and resistance, and she was jumping on a trampoline. I found an elephant jumping on a trampoline. I literally taught it. Literally the next week I was out teaching a live 3-day training, and I just geeked out because I really do love this. Now, what I need everybody to do, because Marty's beautiful. He's a beautiful, beautiful creature. Tim's scared of elephants. We should all make fun of Tim being scared of elephants, by the way. And that might be one of the reasons why I did find an elephant and not like a horse or a donkey or whatever. It's just to trigger Tim a little bit.
You don't make fun of people's fears, bro. Come on. I mean, they give me nightmares. I mean, it is what it is. I mean, everybody else can love Marty. It's great.
He's beautiful, bro.
All right. I'm going back.
Tim, I need you to do me something. Okay. I need you to stay here. Be with me for a second. I need you to stare at this elephant, Tim. Okay. I want you to connect on a spiritual level with Marty. All right. And it's okay. It's okay. All right. And I want everybody to do what Tim's doing. I want you to connect with Marty on a spiritual level. And I want you to stare at this beautiful, beautiful, look at that elephant trunk go up and down. He's having so much fun, so much fun. Now, Marty has patterns in him. Marty has support and resistance in him. Marty has momentum in him. Now, when Marty's at the high, okay, he's at the high price. He's at resistance. Where's Marty going to go, Tim? Most likely. It's not guaranteed. But historically, where was Marty going to go?
He's a big fat elephant. He's going to fall back down.
He'll fall down. Unless Elon Musk has a nice little SpaceX rocket that's going to send him into outer space, right? Because that does happen. Sure. But what does the pattern in Marty do? The pattern in Marty is he goes up, he comes down. He goes up, he comes down. Yes, stocks go up and stocks go down. Very similar to Marty going up and Marty going down. Every now and then, Elon sends a stock on a SpaceX rocket to Mars and everybody's happy because they just made a lot of money. But that's not typical in trading, right? Markets go up and markets go down. Now, as Marty is coming down, 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 I want you to focus intently on the momentum of Marty. As Marty is going up, initially as he just drives off that support level, i.e. the trampoline, he has a lot of momentum there, right? And as he's going up, 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 he comes into that resistance level. Once he sets resistance up into this range, Marty starts picking up some steam as he's coming down, just picking up steam. He is hot. He is fast. He is, Tim, you called him big and fat. He is offended at you. He doesn't like you for that. He is chunky. He's not fat. I feed him well. But here's Marty. He's coming down into the trampoline. Now, guys, the trampoline is support. Okay. The trampoline is support. Marty has some heat. He's coming in fast. You don't want to buy on that big candle. You don't want to buy Marty simply because Marty hits support. The support is the identification. The support is when I'm getting ready, but I still want to see Marty confirm. I don't want to buy Marty just because Marty's sleeping on a tramp. I have no clue if Marty's jumping right now. I want to see Marty just confirm. I want to see those buyers come in and drive Marty back up, thus creating that upward movement in price. So once again, as Marty's coming down, 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 where does he come into? He comes into that technical catalyst of support, i.e., whether that's a moving average or a significant whole number or a previous level of resistance or a Fibonacci number or a trend line. It doesn't matter. He's coming into where we identify that as the trap or as support. Now, Tim, can you see the trampoline on this with Marty? Can you identify the trampoline?
Sure.
Okay. You can identify the trampoline, right? It's not hard, right? Not hard. Okay. The same way that Tim can identify that trampoline, ladies and gentlemen, is the same way Tim can identify a support level on a chart. It might not be as clear as day as this trampoline, but it's a known catalyst. It's a known tramp. Now, Marty, being a big old elephant, can certainly break that trampoline, right? We want to see the tramp hold. Marty's a big elephant. The stock's got some heat coming down. We want to see Marty hold the tramp. We want to see that concept of slowing momentum. And you know what, guys? When Marty hit the tramp, he didn't just stop. He didn't just stop and immediately go back up. What happened? And I know it's hard to look at, but what happened when Marty hit the tramp? Well, what happened is he slowed down. He hits support, he slows down a little bit, and then he springboards up. Well, guys, support is not the top of the tramp. Support is a zone around that level. So that zone goes from here, the base of Marty, to the top of the tramp. And as a trader, if I'm sitting on support and I have that slowing momentum, All we do, ladies and gentlemen, according to the step system, is we put a nice little order right above Marty. Because once again, think about this. I don't want to buy Marty just because he's on the trend, correct, Tim?
No,
I
not
don't want to buy,
confirmation yet.
I don't
Yep.
want to buy a stock just simply because it's on support, correct?
Nope.
I want to see support hold. And I don't want to be the first buyer, correct? I want to see Wall Street come in. I want to see institutions come in. I want to see hedge funds come in. And you know what? I can't call them up and say, hey, when are you going to buy? Where are you going to buy? When are you going to trigger? I can't do that. But what I can do is I can put an order right above Marty, right here, that if Marty decides he wants to jump, guess what I can do? I can jump with Marty. Rinse and repeat. Jump with Marty. That is why support is so important, ladies and gentlemen. That's why the concept of momentum is so important. So as Marty is coming down, 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 down into that known support level, i.e. significant whole number, Fibonacci, doesn't matter. I'm looking for that slowing momentum, number one. That slowing momentum is the visual identification that Marty the Elephant, my best friend, has hit the trampoline. Now, simply because he has hit the trampoline does not mean I want to buy. No, I can see the slowing momentum. I can see the support level coming in based on the slowing momentum of the candles. But what do? We get an order right above Marty's head, which would be the high of the day on an intraday level. You get an order right above the high of the day. So guess what happens if Marty decides to jump? Well, if Marty decides to jump, we're in with it. And the beautiful thing about that, guys, is I don't have to be sitting in front of my computer like a hawk, staring at the chart, wondering when's Marty going to jump? Because you know what? I've looked at Marty more than anybody else. That Marty, he likes to be lazy. He can hang out on that trampoline for a week straight before he wants to jump. And I don't want to stare at Marty because that's kind of stalkerific. I don't want to stare at Marty for a week straight before he decides to jump. I want to get my order into the market and live my life. I want to get my order in so that if Marty does jump, we can jump with them. Now, the concept of resistance is the opposite of support. The concept of resistance, we're looking at always above the stock, always above the commodity. Resistance is those known levels on the chart where the stock, where traders are locking in profit, thus driving the stock back down. When resistance is broken out of neutrality, that's when you start trends. When support is broken, that's when you start a bearish downtrend. So resistance is the level that we're really looking at to either one, buy above resistance because old resistance is now new support, or two, to sell at a resistance level as well. Now, resistance doesn't form randomly. It forms the exact same way that support does. Now, what creates resistance from a psychological perspective is as the market is going up, 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 up. Well, what's creating that price appreciation is higher demand. Demand is driving the stock up, 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 up. But once again, as a trader, what is the only way we can actually make money? The only way we can actually make money, ladies and gentlemen, is if we lock in profit and thus increasing the supply. And as we increase the supply, you now have supply outpacing demand, thus creating the resistance ceiling. And then you have price depreciation coming out of that resistance ceiling. And it really does come to the simple concept of demand drives price up. When supply outpaces demand, markets have a tendency to come back down and retest that support level. So when you're looking at resistance here, going up, 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 it's the exact same concept. Markets go up. Remember Marty the Elephant. He springboards off that once he hits the trap. And as he's going up, 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 what happens? Well, gravity starts taking hold. Marty does not go at the exact same momentum as he originally did. What happens to a stock? It's easier to drive the momentum of the stock off of support than it is after 6, 7, 8, 9 days of price appreciation, ladies and gentlemen. Because after 6, 7, 8, 9 days of price appreciation, all the traders that were going to trade the stock, they're already in. You're the only one that's not. So if you're already up 6, 7, 8 days in a row, well, guess what, guys? That trade's already done. You missed the party. You were late to it. You got to wait. You got to be patient. Patience is a position. And so now what the traders are going to be doing, they're now locking in profit. And as they lock in profit, it increases the supply. offsets the demand. And what you initially see from a visual identification is you see the slowing momentum. You see that small body candle, the slowing down. And what do? We lock in profit before we see the big distribution of downward movements in price. And that is, once again, rinse and repeat. So coming back to my best friend, Marty, watch Marty as he elevates off the trap. The velocity Marty has when he elevates off the trap is its highest velocity, because that's when the traders are getting in. They're not going to wait for Marty to get at the higher high. They're not going to wait for 7-8 days. They're not going to wait for more evidence. If you're the analytical that has to have all the evidence in the world, by the time you get enough evidence, everybody else has already click the sell button, trade's over, you're buying what they're selling to you, and they are more than happy that you needed all the evidence in the world, and then you lose your money, and then you say to the market, oh, this is just gamblers, oh, this is a rigged system. No, you were late. You were late. The party's over. You were late. It had nothing to do with the market. It had nothing to do with sector rotation. It had nothing to do with my best friend, Marty the Elephant. It had everything to do with you being late to the party, because you didn't understand the concept of momentum and support and resistance. So once again, if we're looking to trigger off that support bounce slowing momentum, as Marty starts to springboard, well, what happens to Marty? As Marty springboards off that trap, well, what does Marty do? He starts to slow down. So once again, what does Marty do? As he hits the trap, as he goes up, 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 look at him slow down. Once again, look at him slow down. Once again, look at him slow down. Let's do it again. Slowing momentum. Once again, I just love looking at Marty. I can geek out on Marty, guys. But the reality is he starts to slow down. And now, once again, guys, as that slowing momentum is taken into Marty, that is the visual identification that Marty is losing momentum, because resistance is now forming. Now, guys, simply because it's losing momentum doesn't mean I just want to get out. It doesn't mean I want to initiate a short position. Slowing momentum is, let me rephrase. Slowing bullish momentum is not an indication of bearish momentum. It is simply an identification that Marty is slowing down. But what I can do if I'm in a bullish uptrend and I'm looking to lock in profit is I can now start adjusting my stop loss underneath the feet of Marty, which would be the indication underneath the low of the day. And so I want to start adjusting that stop loss. Once Marty starts coming down, it's all out. So coming back to this, guys, those levels of support.
1 second.
Yeah, go ahead, Tim.
Matty, I did a quick straw poll here in the chat, and the consensus is in. Everybody loves Marty. I'm on a lone island by myself. So
Marty's amazing.
Yeah.
Like I said, I have not been managing the chat, because when I'm in PowerPoint mode, I'm in PowerPoint mode. When I'm in teaching mode, I'm in teaching mode.
Yeah.
And Tim gave me a very specific thing. I had 75 minutes and I have 5 hours of content with Marty. So I told Tim, you got to manage the chat. You got to manage the chat, because if I manage the chat, we're going 5 hours tonight. And I certainly don't want to do that, given the fact that Noah Davidson's teaching the Tackle 25 literally in 45 minutes or 35 minutes from now. So Tim, I knew the community would love Marty. You're the only one who doesn't. You don't get him. You never have. You're offended.
Go on an island, Tim. We will not.
We don't vibe. By the way, if you're out there watching right now, I think this would be really awesome if some person just is joining us for the very first time. Everybody just put the word Marty ! In the chat. I love that idea. Just 100 Martys just screaming at the same time. We might need a t-shirt, Matt. We might need a t-shirt. But
I love Marty. Well, and you know what, guys? I'm glad you like Marty, because it's kind of like taking your girlfriend to go visit mom for the first time. You want mom to like the girlfriend, right? I wanted our community to like Marty, so I'm glad they like Marty. I truly do believe this is the greatest analogy in stock market history, so I'm glad that's the case. But again, when you're talking about Marty hitting that trampoline or hitting those resistance areas, we can see the trap. Well, guys, that's what we call a catalyst. Marty could break the trap very easily. Timmy's not fat, he's just hefty, but he does weigh a lot, and he could break that trap. That is what a technical catalyst. It is the identification of support, but it is not support until Marty is confirmed not to break that support level. There are 5 known areas of support and resistance. 5. There are more than that, but there are 5 primary ones. Significant price levels. That is what we call a significant whole number. The second one, and significant price thresholds, guys, are psychological levels, 10, 20, 50, 75, 100. There's some that are more important than others. You know, for example, any number that ends the way our currencies work, 5, 10, 20, 50, 100, those are going to be more important psychological levels than say 75. It doesn't mean 75 would not be a significant whole number. It certainly is. It's just not nearly as strong. I mean, we were talking in the halftime report. I don't remember if it was yesterday or the day before, but we were talking about why we loved a certain breakout. It might've been on Billy or something along those lines. And I was like, well, I love it more because it's breaking $100. When it breaks through or comes into a significant whole number, those are such psychological levels. One of my favorite ways, though, in a standard market is simply looking at where the historical levels of support and resistance are. There's an old cliche in the market: old resistance is new support is old resistance, so on and so forth. The third one is what I call connecting the dots. You know, it reminds me of my daughter Katira. When I'd give her a coloring book when she was younger, she's 11 now, but when she was younger, I'd give her a coloring book and it would be 1, 2, 3, and you could connect the dots and all of a sudden you draw this pattern. Well, connecting trend lines is very similar to that. You connect as many support dots as you can, and the stronger that support trend line becomes. Same thing with resistance. And guys, you got to connect at least 3. You got to connect at least 2 to 3. You cannot just draw one and just make sure that, because that's just random and arbitrary. The more dots you connect, the stronger that trend line is. Popular moving average. And when we were designing this PowerPoint, guys, because some of these slides we use in other materials as well, but I really wanted the word popular in there because they have to be widely used, right? I mean, Coach Mark and Coach Frank love their moving averages far more. They geek out on moving averages more than anybody else does, probably to a level that would even annoy me. But if you're using a 38 EMA crossover of a 45 SMA, stop trading, go back to school, do something else. You got to use things that other things use. Technical analysis works because it's almost like a self-fulfilling prophecy. It works not because you and I use it. It works because Wall Street uses it. It works because hedge funds use it. It works because other traders use it. That's why it works. It's this self-fulfilled prophecy to a certain extent. So when you're talking about moving averages, you know, there are 2 basic types of moving averages. You have your SMAs, which are your simple moving averages. Excuse me, I need to get a glass of water real quick, Tim. Excuse me. You have your SMAs, which are your simple moving averages, and then you have what is called an EMA. And an EMA is a weighted moving average, which gives greater credence to the previous few days than it does on day, 7, 8, 9, 10, or 11. When you're looking at SMAs, you really need to stick to some of the standards: 20, 50, 200. The 20 is a short-term moving average. The 50 is an intermediate moving average, and the primary moving average is the 200 SMA. EMAs can be a little bit more, I would say, debated on the timeframes of EMAs, but I would say the 3 most important timeframes that are traditionally used in short-term trading are your 8 or your 9. And I like literally when I hear Noah and Mark argue what's more important, the 8 or the 9 EMA, I'm like, oh my goodness, you guys are talking about 0.0. You're talking about the difference on a pip on a stock. It's ridiculous. But your 8 or your 9, you can use either one. I personally use a 9 EMA. I know a lot of traders who also use a 13 EMA as well. So an 8 or a 9, pick one or the other. 13 is also good. But when you're talking about support and resistance, you're really talking about those simple moving averages. The 9 certainly does play a role, but some of your lengthier time frames of moving averages on the EMA class doesn't. So your 8 or your 9 on an EMA and your 20 or 50 and a 200 on your SMA are the better ones that really kind of help identify short to intermediate to more primary, longer term support and resistance zones. Fibonacci levels. I do believe Fibonacci was more important back in the day than I do it is today. However, I still use Fibonacci's to help me understand potential targets of where resistance could form or where certain retracements could form as well. So when you're looking at these significant price thresholds, you're really looking at those significant whole numbers. Once again, you're really looking at where currencies are denominated, 5, 10, 20, 50, 100, and so on and so forth. When you're looking at previous areas of old resistance here, now acts as a new support here, acts as a new resistance here. Those price thresholds are interchangeable. Now, for those of you who cannot see the numbers over here, well, guys, this isn't a stock you're looking at. What you're actually looking at is you're looking at, I believe this came from, it was a little while ago. Don't quote me on it, but I do think it came from the Aussie dollar, US dollar cross pair. I wanted to put a currency in here because I want you guys to see how these things truly are interchangeable. Coming back to the previous old support, new resistance. Old support, old support, old support. Where now is it acting? It is now acting as a previous area of old support, which means it's now new resistance. Looking at a couple, just a couple examples of that I wanted to give you guys. When you're looking at significant whole numbers, a couple stocks that came to mind here today, HCA. When I'm looking at HCA, you're seeing this nice little double top, double bottom. Now, once again, when does a trend truly start to develop out of neutrality? It starts to develop with that first initial higher, that first initial lower low. Well, what ultimately gets broken? Support gets broken on HCA. You set a lower low, and thus it starts retracing. Well, as it's retracing back in, thus forming that lower high, where is it now starting to see a little bit of slowing momentum? Right there at $100. It wasn't surprising to me today to see some type of sell-off on the intraday on this candle, given the fact that you now have that lower low, you're forming a lower high, you're now in between two decreasing moving averages, and you're pegging at $100. That is an obvious signal for a lot of hedge funds and institutions, and most likely algorithms that those hedge funds and institutions are driving to now start locking in profit, or excuse me, start to initiate short positions. On the bull side, PXD came to mind a little bit. Pioneer Natural Resource, a little distressed area of the market. And I've seen this a lot in these distressed areas of the market. What do you see? You see PXD set a higher high. Where did it set it? Right there at the 200-day moving average. It retraces back down, forms a little bit of a U-shaped reversal type pattern. Well, why do I like this PXD a little bit? I like it because the trigger would be above $100. Why do I like support? Because it's coming into old support, which was now tested as old resistance, confirmed as new support, secondary confirmation now is new support with now a rising moving average. It's almost like a lawyer. And yes, I do bring a little bit legalese into this because I do have a legal background, but it's almost like a lawyer. You want to let the evidence do the talking. Let the evidence lead you to a conclusion. Do not come in and try to force your will on the market. Let the market speak to you. Let it build its case for you. I like it because it's forming a new support level. It's been tested multiple times. It's now in between rising moving averages. You got to let the evidence do the talking in that capacity. Coming back to the presentation a little bit, when you're looking at trend lines, connecting the dots, 1 dot, 2 dots, 3 dots, 4 dots. That trend line now has a consistent trend line to whereas next time it comes into it, I might be a little interested because the evidence is fairly overwhelming that this trend line has been consistent in this overall primary uptrend. Well, once again, I was talking about Apple from a trend line perspective earlier today in our webinar here tonight. Apple, very consistent bullish uptrend. Love it. Absolutely love it. Apple should be on absolutely everybody's watch list. Well, one of the reasons why I like it is because of the consistency of this bullish uptrend. And not only the consistency in the breakout versus the retracement, but when I look at this from a moving average perspective, where does it come into? Every time we see that dip, every time we see that pullback, every time we see that retracement, however you want to categorize it, it comes in between these rising moving averages, the 9 and the 20, and then you see it go up, up, and up. Well, why else do I like it? I like it not only because of that, but I like it because of the trend line. When you're drawing your trend line, going from the low, connecting the dot, let me get my mouse, connecting that dot, that dot, that dot, that dot, connecting as many dots as I can potentially connect. So I like this breakout. Well, if we get the breakout, you know what we're going to see on Apple? Most likely, trading's probability, there's no guarantees, but most likely you'll see price appreciation because that's what Apple does. That's what the market has a tendency to do, is see price appreciation. I don't even know what the percentage is, but I'm just going to make it up based on my own understanding. I'm willing to say 75 to 80% of the time the market's bullish. The other 20 to 25, it's neutral or bearish. The majority of the time, it is bullish. The majority of the time, every action governments and central banks and Wall Street takes is for price appreciation. So that's why I like it. But I also like it because of the consistency on that trend line. So if we do get that breakout confirmed, it hasn't done it yet. But if we do get that breakout, more than likely, I'm not going to say this for a guarantee, but I like a 390 by 400 price target on Apple. I do. I like 400 because of the significant whole number. I like 400 because I'm seeing some evidence based on potential average yield. I should do a webinar on potential average yield, Tim. Write that one down, Tim. 2 webinars from Matt coming in the future. One on value investing and the other one on potential average yield. I think both are very, very important concepts.
Got it.
But I like it here. And once it does set that new target, Marty's going to fly here, guys. Marty's Apple. Marty's Apple. Marty's Facebook. Well, not Facebook. Marty's not Facebook. Eliminate that from the webinar. Marty is not Facebook. I never mentioned those words. Marty's Tesla, Microsoft, Amazon, Apple. That's Marty. Marty's going to jump. He wants to jump. He has a history of jumping. He's at his absolute most joyous moment is when he's jumping. Marty's jumping here. He's probably going to get a little overextended between 390 and 400. And when Marty starts coming down, where am I looking to get back into Marty? When am I going to look to jump back on Marty and jump with him? When he hits that trend line, because of the consistency of that trend line. That's how important trend lines are and the consistency of trend lines. We talked about moving averages and then obviously Fibonacci extensions, Fibonacci retracements, and we should do a deep dive on that. I know we did a show just recently on Elliott Wave and Fibonacci. I would like to geek out on that too. So Tim, mark me one down in the future for Fibonacci's as well. So 3 for me: value investing, potential average yield, and Elliott Wave as according to Fibonacci. Those are the 3 topics coming down on the next few Wednesday webinars that I personally do. Now, guys, I'm running late here. We got the Tackle 25, and I know a lot of our Tackle Trading Pro members are going to head on over to listen to Noah talk about cash flow, naked puts, boomerang trades, covered calls in the Tackle 25 covered call system. But first and foremost, did you guys have fun tonight? Did you guys enjoy yourself tonight? Did you reaffirm some concepts that you had already known? Did you learn something new? That is so important to me, that anytime you have a chance to sit down and give your time to somebody else, and I so much appreciate your guys' time, that you learn something, you get something positive out of it. So what have we talked about? What have you learned here today? We did a quick review of what technical analysis is. We talked about the different types of trend analysis out there, bullish and bearish trends, what creates a pivot from a psychological supply and demand and trading psychology perspective. And we spent a majority of the time really identifying support and resistance. I only want to take up about 5 more minutes of your time, guys. So if you'll be patient with me, let me talk to you about what the benefit of tackle trading is, so that you guys can make a decision whether or not, if you're not part of our wonderful community, then you can make a decision to be a part of our wonderful community. So thank you so much for being here. Give me another 5 minutes or so, and then I'll open it up to some Q&A that I can answer any of your questions or topics or any questions you guys have. First and foremost, Tim talked about this earlier today. We're really about 2 things, guys: learn and trade. Education plus application. That is really what it takes to be successful long-term. And quite frankly, the biggest mistake I see people make is they discount the amount of education you need to really master this skill set. You know, I spent 4 years in undergrad, learning political science and history. I was a poli-sci major. I was a poli-sci major. I was a history minor. I knew I was going to law school. That's why I was a poli-sci major. That's the only reason to have a poli-sci degree, because outside of that, it's completely and utterly worthless. But I spent 4 years learning just the foundations of political science and history and so on and so forth. And I enjoyed my time in college. I enjoyed it. I learned a tremendous amount, lifelong friendships, so I don't regret it. I don't regret it, even though I've never used my political science degree. History has just been a bedrock of everything about me. So I really like that. But then I spent 3 years in law school, and I graduated law school there in May of 2004 from S.J. Quinney School of Law here at the University of Utah. I spent about over $100,000 on my complete education. Tim and I, Mark, we don't come from rich families, guys. We're blue collar people. We come from coal mining country in Emory County, Utah. Look it up. You can see where I come from. Speaking of that, Tim, I went through our old home we grew up in. It is not looking good. I spent 7 years and a lot of money learning how to do something that I never wanted to actually do in my life. I didn't spend nearly as much money and not nearly as much time learning how to trade. And yet trading has been evolutionary for me, right? But you got to put your butt in the seat and you got to value education, guys. You cannot come into this market and think you're going to be great long-term without proper education. It's just, that's not going to happen. And I told this story on the podcast, and I'll quickly tell it again. I've been in this industry a long time, ladies and gentlemen, and I've worked with companies whose entire mission was to educate the masses. And I've seen this at many, many, many educational firms over the years. We want to educate the masses. We want to educate the masses. We want to educate the masses. But yet the level of price threshold that you had to do to get that type of quality education was, an arm and a leg and your firstborn child sometimes. And I wasn't really comfortable all the time with that. Even though I value education, I understand the value that it brings and the value that the people that taught me, like Keith King and Michael Brooks and Gino Poor and so on and so forth. But we really wanted to make sure it was affordable to everybody. And that's what tackle trading is, guys. It's the quality education that it would take you $20,000 to $30,000 to get out there in the open market, but you can get there with a pro membership. I mean, we really wanted to create a company that really valued education for the masses. And if we wanted to really get out there and teach the masses, you got to give the ability of the masses to afford your education. Because when you have a price threshold of entrance into the thousands upon thousands upon thousands of dollars, you're not targeting the masses. You're targeting the people that don't really need your education because they're successful in other aspects of their life. And by the way, guys, you will always get that out of me. I am transparent. I will give it to you exactly how I see it. I don't pull punches. Don't get me wrong. I loved my experience there. I've done it myself, like many of you guys have. But once again, my entire belief system is this: if you're going to educate the masses, you got to give them the ability to afford it. So put learning first, guys. Put learning first. Put your butt in that seat. Put the time in. You don't want to be a trader just in this cycle. I've seen too many stories in the last 2 months. Oh, let's just go buy out in the money call options. Let's just go buy every dip. Guys, that's not going to last. That's not going to last. Things change. And when those things change, those traders, they're the back holders. There's going to be a lot of horror stories coming out of these last 3 months, guys. There is. And the simple rule is they did not put education first. They did not put education first. I know a kid who is now trading for a living. He's never taken one class, never taken a mentorship. He's never learned one thing. He's literally buying bankrupt companies and he's trading for a living, and he's paid a few of his bills, and he thinks that's just what it's going to take for the rest of his life. And I didn't break the hope. That's not me. That's not my job. He's going to have to learn a very valuable lesson on his own. One way or the other, the market's going to teach you valuable lessons here, ladies and gentlemen. Personally, from my experience, from Tim's, from everybody at Tackle, from every mentor I've ever met, from everybody on Wall Street, they'll tell you all day long, put education first. Put education first. And whether you do it or not, that's your responsibility and that's your decision. But you're going to pay your tuition one way or the other to the market. Okay, one way or the other. Education, education, education. Swin, one of our halftime crew members, Tackle Train Pro members, been with us for a couple of years now. He said something in our halftime report that really, really meant something to me the other day. And I don't even think Swin understood the power of what it meant to me personally. But somebody said something about what I was analyzing. And they gave me a compliment on something I was analyzing at the time. And Swin says, well, that's because Matt's not a follower. He's a student. That meant so much to me, Swin. It meant so much to me because I do pride myself on being that student. I don't care how much experience you have. You should always, always, always value education above all things. Always value education above all things. And with that education, You take that and you apply it into the market. And that's what trading is. It's taking your skill set and applying that skill set in the marketplace, because knowledge without application is nothing. It's good. I don't want to say it's nothing. I don't want to discount it, but it's not life-changing. You're the annoying dude at Sunday brunch that keeps talking, that everybody looks at and like, you talk a big game and you do nothing with it. How many people in your life have you met that talk a big game and do nothing with it? That talk about the Fed, that talk about the government, that talk about politics, that talk about history, that talk about everything. But you know damn well they have no education and they have no application. It's like, shut your mouth. Just shut your mouth. But you don't want to be rude. So you just nod your head and go along and say, okay. And then what I do is I call up Tim and make fun. But education plus application is life-changing. And what I've found is being able to surround myself with like-minded investors, like-minded traders to help me navigate myself, because this market is so big. This market is so big. Just in terms of getting ready for the halftime report, guys, Tim, myself, Mark, Noah, who is ever on the halftime report, we spend hours and hours a day scanning the entire marketplace just to give you guys the relevant information you need on a daily basis. The Traders Lounge and everything else we do to make sure that you are getting the information that you need on a daily basis to navigate this market and run your business as an investor. And then obviously that's what it takes to succeed, in our opinion. Learning how to trade, I talked about this, but we have wonderful systems that tackle trading. We have the 7-step guide to trading for those of you who are very, very new to the market. It's a beginner's guide to trading. The step system is our flagship program for swing trading. We have tons of systems out there that you can learn. The 101 series is free for all pro members. Trading, using our scatter reports, using the Tackle 25, using those premium systems that we put out there. We don't just teach you the concepts, the strategies, and the rules. We help you understand them and learn them, but we also help you identify potential opportunities in cash flow systems or in directional systems. Joining a community. I've taught hundreds of thousands of people around the world, guys. And I'm telling you, the one common theme I always see with people is they're always looking for a community. They're always looking for people to get help with, to have their questions answered. And one thing we pride ourselves at Tackle Trading, guys, is to be there for you guys. Yeah, we run the company. We own the company. We're there every day, though. We're there every single day from the very top of Tackle Trading to the very bottom of Tackle Trading. You're talking to traders, guys. Mark Justice, a wonderful trader, been trading, a old-time professional gambler. He runs our customer support. Find a financial company that literally, when you talk to their customer support, you're talking to an active trader to the quality of Mark Justice. I challenge you to find somebody in the educational space that customer service is ran by traders, that product development is ran by traders, that marketing is ran. That might be why we suck at marketing, Tim. It's because it's ran by traders. Every aspect of tackle trading is ran by traders, guys. Every single person you talk to is a trader or is learning to be a trader. That's the beauty of tackle trading. Our community, our Traders Lounge, mastermind groups, Mind of a Trader, coaches shows we do, halftime report we do on a daily basis. You have access to all of that because support is so important. Learning, applying, important, but having the support you need, and not just in a phone call, but people you rely on and people you trust because you've been there in the trenches with them on a day in and day out basis. You're there with them on a weekly basis. You've heard their words and their thoughts and their techniques so much that it's in the back of your mind. That's that community, and that's that support system that you get. So if you've been enjoying the webinar, guys, and you want to be a part of tackle trading, enjoy this community, you can sign up for the pro plan here today. We're running a annual special at Tackle Trading. Every 4th of July, we do it because we celebrate America's Independence Day, unlike Hong Kong today, but I'll save that for the halftime report tomorrow. But sign up for a pro plan, guys. You get access to all of our content, our blogs, our scatter reports, which there are 4 of them, the Traders Lounges, Coaches Shows, Cash Flow Club, Mind of a Trader, Tackle 100 series, where you get access to 2-hour on-demands, guys. The pro membership itself, I've seen people, and I'm not kidding, guys, I've seen people spend $30,000, $40,000 literally for the content we give to pro members, literally for $100 a month. For $100 a month, which you can get 15 days free on us just to test it. And I've seen people, and I'm not kidding, I've seen a lot of people, and I'm sure there's some of them here today that have spent a tremendous amount of money in education, and they get more from tackle trading, what we do from a pro membership, than what they have spent that would have cost a Tesla car to make. That's how much we have put into that pro level subscription. I've had other consultants and marketers come out, and they have told me I need to charge between $500 and $1,000 a month for what we give to our pro members. And every single time I've told them to get the hell out of here, and otherwise some other choiceful language, because that is not why we created Tackle. That is not why Tackle exists today. So if you've been enjoying that, guys, and you want to make part of this long-term, get a Tackle annual membership. You get a nice little discounted price today. We're also running a special pricing on all of our premium systems that are half off. The STEP system is our flagship swing trading system. You get both manuals, on-demands, mastermind groups, trading journals. We give it, literally, it's in a box, guys. We put everything you need in that box for every one of our systems. Cash flow condors. For those of you who are new to cash flow systems, cash flow condors is a specific system we trade called the Iron Condor and the Russell 2000. I personally don't do it. I don't trade iron condors any longer. I've been burned too much on iron condors on individual stock plays, I think, but I just don't trade iron condors very much. But I do trade bull puts and bear calls, and I love bull puts and bear calls. And I totally respect, Tim loves condors, Tyler loves condors, Emily loves condors. I like more of the bull put bear call side of it. But that's the beauty of cash flow condors is, yes, it will teach you specifically on that one system, but it's strategies you can apply on absolutely anything in the bull put bear call or the iron condor, and obviously mastermind groups with that as well. Our last premium system is the bear market survival guide, 6.5 hours of on-demand content. The modules, we go through the history of the financial cycles, fighting bear markets, learning how to add insurance to an individual stock play that you might have a little bit of risk on, learning how to protect that portfolio against long-term bearish cycles, learning how to manage a portfolio protection, when to add a hedge, when to take a hedge off. I think that's as important of a question as learning how to put on a hedge, i.e. buying insurance on your retirement. When do you not need that insurance any longer? I think that's very important. Trade management is very important to learn. Learning how to actively trade in bear markets, obviously very important. That's the bear market survival guide as well. And just guys, just a few comments, few testimonies from some of our pro members. Just if you're on the fence, listen to what Marco says. There is not a better tool for learning the financial markets. Their teaching, their content, their community, and their experience is second to none. Thank you, Marco. Paul has been a valuable member of our community for years and years and years. So thank you very much, Paul, for putting this in. And we get all our reviews on Trustpilot, guys. We don't solicit for reviews. We don't. If you love Tackle, you got to go through a third party to even give us a review, and find that that's unique about Tackle trading, guys, too, because I could easily go solicit a whole bunch of reviews and just give it. No, we have a third party that is not even affiliated to Tackle trading do our reviews so that you're getting actual reviews from actual people. Paul says very active environment for trader. This is a very active environment for trading enthusiasts and professionals. They offer a plethora, I love that word, Paul, and a plethora of resources and live shows. Their support is also top notch. Thank you so much, Paul. And Yiger, thank you so much. Market can give you as much money as you want. I agree with that. It can. It can give you all the riches and all the glory you're seeking out there, ladies and gentlemen, but you need the skill. Tackle trading will give you that skill. So ladies and gentlemen, if this is something, if you've enjoyed this, you want to test it out, this is a great time to actually become a member of Tackle Trading. You can always get a 15-day free trial, guys. You can always get that. But from now until July 8th, we are running our annual holiday sale for the 4th of July, where every premium system at Tackle Trading, the STEP system, Cash Flow Condors, Bear Market Survival Guide, are all 50% off. You can also bundle an annual membership at Tackle Trading and the STEP system, which is a $26.95 level, for $14.95 as well. So guys, if you have any questions on what you should do, what you're looking at, you can always get with us at Team at Tackle Trading. You can talk to Mark. Obviously, we're in the halftime report every single day. For those pro members that want to take advantage of some of the premium systems, you can certainly talk to us in our coaches shows or traders lounges or whatever you need out there as well. But take advantage of this, guys. Take advantage of it. You know, there's so much interest in the markets coming out of this pandemic that I don't even know what to do with it. There's so much interest out there, but that interest needs education. If you're part of that individual and you don't want to just take advantage for it right now, but you want to be a trader for the rest of your life, become a member of Tackle Trading. We're going to teach you how to do it. We're going to help you apply it, and we're going to answer your questions when you have those questions, because we are a community together. And with that said, guys, Tim, I'm going to bring you back in. I'm done talking. I had fun. I hope you guys had fun as well.
Damn, bro, that was amazing. I got to tell you, just a fantastic pacing, fantastic job. I know how much work you put into to get ready for this. And, you know, you love teaching, Matt. It's very apparent to anybody who's watching you, even if it's for the first time or the 100th time, especially when it comes down to technical concepts. You know, Marty, maybe I can get on board with. If you can email the Disney Corporation and ask why they had to have so many nightmare sequences and cartoons from the 1950s, 60s, and 70s that had elephants in them. I get it. But I'm the only person, everybody else loving Marty out here. And by the way, you know, one thing I love is when you start talking about our programs and pricing and this offer and everything, Matt, you know, our loyal members and everybody out there, they say the most amazing things. You know, it's really incredible watching the people who are, it's humbling.
It really is. You know, like I said, I have not been looking at the chat at all. I've been, you know, when I'm in teaching mode, especially on YouTube, because there's a lag when you're teaching and you don't want to come and answer a question 30 minutes, 30 seconds later. But, you know, obviously in our webinars live on Zoom doesn't have the lag that YouTube has. You know, obviously they're much more interactive. You know, I came in here just barely and I pulled up the chat and I'm kind of reading the headlines from, you know, our pro members, you know, Jim. I've known Jim a very long time. Not Jimbo, but Jim, great value. If you want to learn the trade, there's not a better value. Jim, I agree with that. You know, just some of the comments, you know, it really is humbling to see your pro members. And we've seen this a lot, guys. I mean, we don't sell a lot of tackle trading. In fact, Tim's like, you know, don't be afraid to make an offer. My offer is simple. If you like it, be a part of it. You know, I mean, I honestly don't feel the need to hard sell anybody. I don't want to hard sell anybody. I don't want to force somebody to take advantage of a really good opportunity, because I don't want to beg them to do something with their life 6 months later. I want to work with people that see the value. I want to work with people that see this as something that benefits them long-term and understands that there's going to be a journey they have to take. And quite frankly, I don't want to give motivational speeches to people 6 months later that it's like, oh, maybe I'll get off my ass right now. So, you know, it's just, if you see the value, you want to be a part of something cool, be a part of something cool. If you don't, but you enjoyed your time here, thank you for coming. I'm more than happy with it. This is more about them than it is me, Tim. Right? I mean, I'm just here teaching. This is about what they can do for their lives, and we'll be there the best we can for them. I love our entire community. I love teaching in our community. I love being a leader in our community. I've always said this about Tackle. You know, when we formed Tackle 7 years ago, it really was just formed out of a, you know, Google group, basically. We've tested many other aspects, Facebook groups, Google groups, you name it. What it has evolved into over the last 5 years, I'm humbled by it, number one. But number two, Tackle knows this. Our pro members know this. I don't know what we're going to be doing a year from now. I just know it's going to be cool. That's all I know. I don't know what systems are going to be needed to adjust, because we have to adjust those as market conditions change. But here's what I know. I'm always going to have a community to bounce ideas off of, get help with, you know, get secondary analysis on. And I trust these coaches. I trust them. I would trust any one of the coaches at Tackle Trading to trade my money. I would trust any single one of them, because I know their heart. I know their desires. I know their experiences as a traders, and I know they've put education first, right? So that's the benefit when everybody trades the same systems. You can really help each other out. So if you do see the value, be a part of it. It's amazing. I love tackle trading. I love tackle trading. And it's never going away. I can tell you that right now.
No, no. In fact, it's just going to get bigger, better, and bolder. And I'm excited about all those things coming down the pipeline. Very, very simple here, guys. We're done for tonight. We're going to be doing these each and every Wednesday night, different topics. I got all the topics you told me to write down, Matt, except
get over there to the Tackle 25 cash flow mastermind group. That's obviously starting right now. Noah, sorry for taking up some of your time. Okay. Ahmad, you can get there. Ahmad, I think your account's working now, but you can always get to any one of our pro member webinars. If you go to Trade Center, events calendar, and once the events calendar comes up, if you just go over to Wednesday, Tackle 25 mastermind group. So if you click on that mastermind group, and I'm pretty sure we have the right link. And if we don't, guys, we're working on a couple things with Zoom. Zoom is making some really radical changes, which are obvious given the tremendous demand that they have had over the last 3 months. But you can get access to that webinar right here by the Trade Center, once again, and events calendar.
And you can also find it under courses, Matt. It's a great way to go back and watch all the old replays, by the way. If somebody's new to these mastermind groups, let's say they just signed up for a system. If you highlight the course you're in, actually go back up one more tab, and then come down to like Tackle 25, over on the left, it opens up a window for all the old mastermind groups too. So if you just signed up for a course, a great thing to do, obviously plan your calendar around attending the next one. But it's great to go back and watch, the one in June or May or April or whatever it might be.
Yeah, and you have access to all of those on demands. I mean, the level of content you have access to is really, really impressive. But yeah, I mean, I would take advantage of it. At the end of the day, I'd take advantage of it. It's a special time. You can save a little bit of coin, be a part of a great community. If you have any questions, guys, don't hesitate to email us at team@tackletrain.com. And as always, the holiday, July 4th, the Independence Day special runs, Tim, correct me if I'm wrong, the 8th?
Yeah, and there's a timer on the page as well, but it does go through July 8th, so that's a week from tonight. Give people a chance to think through what they want, what systems would be best for them. And
Tackle Train builds through word of mouth. We don't go out there and do these razzy dazzy, oh my God, get rich quick nonsense. And I'm going to tell you guys right now, I am so sick and tired of every time I log into YouTube or anything else and I see a 45-second bullshit ad about how some young 26-year-old made $14 billion and now living on a yacht somewhere, and all you got to do is buy out of the money call options. Guys, it's not that easy. My God, let's really have an honest conversation here. I just won't do it. I will never do it. I will never do that level of nonsense that other companies do out there, because it is bullshit, and you should run from that, because it's not that easy. Any active trader that has spent any degree of time in the market knows that's not easy. So Tackle Train, we don't do that level of marketing, guys. I'm sure I could put out marketing stuff like that, and I'm sure I could get more pro members, but that's not who I'm targeting. So if you guys, we go through word of mouth. If you know somebody that needs Tackle Train, needs the quality that you've learned to enjoy, tell a friend, tell a family member, share it on social media. We love you guys. Anything you can do to help us, push the great message of tackle trading out there, that's great. See, Jim, that's one of those things that Zoom is driving me nuts with right now. Everything is password now. So Zoom's growing up before our eyes. There's going to be some hurdles here with Zoom, but we'll make sure to get Tim. Get the password. Make sure I know password.
Why don't we do this, guys? If you're watching right now, you're going to be joining the Tackle 25. I will post the link as well in the Clubhouse, Matt, to make sure they know they can find it. If you're a Clubhouse member, I'll make that a post up top. You can go find it. And I'm manning customer service tonight. If you can't get in for whatever reason, buzz us an email at team@tackletrading. I'll make sure I get you in. Okay. But let's wrap for here. Let's get Noah started on the Tackle 25. Excellent job.
Kind of feels like we could go 8 hours on YouTube, Tim, and just pass it on to different coach for 1 hour. Let's just do it. Let's go 8 hours on YouTube, 1 hour per coach. Just pass it on.
We could do like a very like a special event, like a summit, and have different topics, and that would be cool. Online.
Real quick, last question. Hey, Tackle Train, would you guys enjoy like a marathon? Every coach takes an hour, and you guys can come in and out whenever you want. I think it'd be fun. I think it would be fun just to force the coach.
I'm down for that. That would be great.
That'd be pretty cool. Yeah.
And then we could all stand up together and they could tell us which one was the worst. Could we do that too?
We already know who the most likable person in tackle trading is. It's Coach Frank. There's no question in my mind. I think Gino's over there.
Gino or Frank.
But
no.
Emily's up there. Yeah, for sure.
Emily,
right.
Gino, and Frank. Yeah, Emily, Gino, and Frank. That's it.
The trifecta there. Put those guys up in the top. Everybody else one layer down. Emily, fun here tonight, obviously, as always. I know you got a Women in Trading thing coming up here in a couple of weeks. Make sure you follow Women in Trading on their new social media pages, by the way. And I know Emily's gotten out there and done some good work. But we got to wrap this thing. We got to open the other webinar. We got to call it here. We'll be back tomorrow for the halftime report. Same time, same station.
Jonathan, so you and Emily can stare at Christian. I know what happened just there.
I
know what happened there, John. I like Matt. I like his analysis. I would really like to look at Christian though.
Yeah.
There you go. You have it. You got it.
I'm sorry. You're here to learn, not stare at his dreamy eyes and long flowing locks. What are we doing?
All right.
Christian, with that said, I love you, brother.
Before this goes off the rails, we're calling it. We'll see everybody tomorrow. And
Halftime crew.
Come
We'll
and
see
join
you
us.
tomorrow. Same time, same channel.
Yep, we're out.